All right, so here we are going to look at copying what the wealthy do, some strategies they use. So forever, cash value life insurance, whole life insurance has been used by the 1%, has been used by major banks who, when you look at all of the major US banks, with all of them except for one, the number one asset on their balance sheet is the cash value holdings, their life insurance policies. If you look at Fortune 500 companies, they have boatloads of cash value in their life insurance policies that the company uses, or the corporation. So we hear that all of these companies, corporations, the 1%, use cash value life insurance for several reasons, so that attracts us naturally, because naturally I want to copy what the people with the money are doing. They've already figured it out. So we hear of whole life insurance, looks great, but then a lot of times we see a policy or presented a policy and say, like, wait a minute, something doesn't look right. Why do the numbers not look so bad? Or I can't make up in my own mind why a bank or corporation would do this. So we're going to provide some data. We're going to make it transparent here to see exactly what corporations do and how we can mimic them as closely as possible. So key here is, how do I copy the wealthy, the 1%, right? Which here I will mention this. The cash value is always immediately maximized. They have rich cash values on their balance sheet right away. But then also, from a long-term play, the death benefit has a huge value here. And the reason why is when you look at death benefit proceeds, how are they paid out? In every single case, they are paid out 100% income tax-free. If I have a large taxable estate, the life insurance policy may be structured in some type of trust to make sure everything is passed tax-free. But that's in the long-term planning, how to pass funds in a tax-free basis or manner. But the cash value, this is the immediate attraction. People want to know, how do I maximize the cash, get as much as I can short-term and long-term? How do I get the best of both worlds? So what we're going to look at here is an example of an actual BOLI policy. So this is with a bank we're working with, and this is going to display how bank-owned life insurance works. And what I will mention is it is different than what you and I as an individual can acquire. And the key difference is this. You see a $10 million deposit paid into the policy. This is a combination of different companies. The actual policy is placed on 30 employees or executives usually to start. Now the 10 million goes in. What is the immediate cash value here? 10 million in, 10.3 million in cash value. That's an asset on their balance sheet that goes nowhere but up over time. Large death benefit as well. Now, keep in mind, that's a combination on 30 employees, so that would average out to a little bit over $1 million on each employee. Point being though, that death benefit, as it flows back to the company, tax-free benefit. That's going to help them recover costs. So if I'm a bank and I'm matching my employees' 401ks, if I'm helping cover their health benefits and other costs, this death benefit, when they die down the road, the different employees, is going to serve as a cost recovery means. But then I've got the tier 1 asset. Goes nowhere but up. At its core, how does a cash value life insurance policy function? Safe, liquid, tax-free. Now, a BOLI is a little bit of a different animal as far as the MEC status and such on it, but the main point that everyone is interested in is that cash value. They want to know, okay, that's what banks do. How do I copy it as closely as possible? Because if I do this as an individual, usually what's going to happen? Well, I can't get it on an individual policy, and I'm going to trigger a MEC right off the bat. So let's take a look at some traditional policies here. Now, what we have seen to be very frequent is seeing how banks and corporations use cash value life insurance. That's where it starts. That's where people are attracted to these policies, and then they're presented with something like this. Whatever the cash flow is, here's just a basic old school whole life insurance policy, 20K a year going in. What's my cash look like in the first year? Not what the bank had, is it? From a ratio and percentage standpoint. No, it's horrible. And it actually takes 14 years before I have a gain on my policy, meaning at this point in time, I've paid in $280,000 and I have $287,000. Not that attractive. A bank would not do this. A corporation would not do this. It is not an asset, a tier 1 asset on their balance sheet. It's a zero asset. Yes, they have the death benefit, but they don't have any cash, no money they have access to or can use. So what this has to do with here, and what we're going to lead into in our next segment, is again, how do I, as a consumer, copy that first model, what the bank did, or how do I mimic it as closely as possible? This is the kind of stuff we did when we built policies out for corporations, whether it was a pure bank-owned policy or if it was a policy using traditional products for a smaller business. Money can go where? My base premium or my PUA rider. How do the areas function? Dollars that go towards the premium. This is with a traditional life insurance policy. In respect to my cash value, 0, typically in the first 2 years. And then once I hit year 3, 4, 5, so on and so on, that 20 that goes in starts coming back to work for me. That's why I eventually have a positive yield. Key point here, traditional whole life, whatever it is, this premium is an initial insurance expense. An insurance company is going to overcharge me for the death benefit up front. But as time passes, that comes back to work for me. Whereas this guy goes into cash value right off the bat. Money I can access. Begins to yield dividends and interest right away. That's the good stuff. This is how I'm going to copy or mimic as closely as possible what banks and corporations do. Let's take a look. So here is a policy with the same company, same outflow, out of pocket for the consumer. Everything's identical. The difference is the design. So same out of pocket, $20,000. There's my total payments. Now, it's not what the bank had. With a traditional policy for an individual, we cannot obtain that immediate positive cash value. Not possible unless it's a pure bank-owned or corporate-owned life insurance policy. But we can sure mimic it as closely as possible. So here, very close to 90% right off the bat. Crossing over, breaking even between years 4 and 5. Remember, life insurance at its core is what? Safe, liquid, tax-free. Tax-free if I do everything properly, meaning no MEC, I don't lapse it with a gain on it. We've got other video content on that. But if I do everything right, I have these benefits. And then also, no lost opportunity cost. And that ties into the whole idea of the banking concept. How can I use the money as a financing tool? Because remember, if I'm earning, it doesn't matter, call it 4%, I get that 4% on any money that's in cash value and any money I pulled out. So I can use it for other opportunities. That's the key there. And then the real cherry on the top. I'm sorry, Dr. Ace, I know I always forget to mention this and you remind me every week, is we do have a death benefit paid out 100% income tax-free. So from that long range, that long-term perspective, that's going to flow back to me. So if I am copying the 1%, it's within the family or my personal situation, that will have a play at some point in time. But the big thing is, how do I use it, right? How do I have the cash value up front? It's an asset in the balance sheet. It's churning for me. This is great. But then I can use it. I actually have access to my money to take advantage of other opportunities. A lot of info. Hope this was helpful. Talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.